In a few weeks, what was your reaction to watching some of the tech titans testify?
Sarah, to put my reaction in one word, I would say mirthful. I thought that it was interesting that there were two discussions happening on a parallel track, one about anti-competitive practices and then one about how come all these blog posts from Breitbart that I'm dying to read don't make it into my Facebook feed and my grandma's Facebook feed. So I'm mirthful because as a student of history, I remember the threats about breaking up the first Gilded Age's barons and what ended up happening for shareholders. It was a remarkable bonanza of increased stockholder returns. So even in what you would consider to be a worst-case scenario for, let's say, Jeff Bezos, and they tell him YouTube has to be separate or ad tech has to be separate or whatever the case may be, excuse me, in the case of Google, in any of these companies' cases, these stocks roll up 1.5% because if they were to break up, it would be an even bigger value creation moment for shareholders than what they've had already. And just go back to John D. Rockefeller, the breakup of Standard Oil. In 1906, he was sued. It took 5 years, finally, for the Supreme Court to get that decision, and they rule against him. His net worth balloons to $900 million, the equivalent of $9 billion today. Why? Because Standard Oil of New York, which becomes Mobil, doubles in value. Standard Oil of New Jersey, which became either Chevron or regardless of what the names were, all of these became the oil companies that we know and love today, and they all got way bigger. So a separate standalone Instagram, for example. Imagine the value creation in an IPO like that. So I really don't think that tech investors have been terribly concerned about a breakup. But even if a breakup were to happen, that's not a death sentence for any of these companies or their shareholders. In fact, it could be tremendously additive.